back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront, and generate consistent returns year on year. So the first thing you want to do is open up your brokerage platform. I'm using tastytrade. You can use whatever it is that you like. And then you want to open up any underlying and just pull up a list of expirations. The purpose of this is we just want to see what expiration date we're going to be using, and then we can manipulate some data with that information. So the expiration date that we want to choose should be 30 to 60 days out in time, and it should also be a monthly expiration, not a weekly expiration. So the only expiration date that fits that criteria currently is December 20th, which is 50 days away. So now we can take that information, come over to our watch list, and filter out anything that has earnings over the next 50 days. The reason for this is because we do not want earnings to disturb our trades. It will increase volatility, it will mess up our deltas, and it will have a negative effect on our P&Ls. So we don't want to do that. And we also want to filter out anything that has a low liquidity rating level. The reason for that is because we only want to be paying tight spreads, and we want to be able to get in and out of positions easily. We do not want to be paying wide spreads. I've now got this watch list ordered from high IVR to low IVR, but that's just personal preference. And basically at this point, you want to look for something with a nice and high IV rank, with a nice absolute IV level, and you want to make sure the actual underlying is large enough as well, to the point where you can get a respectable credit. So in terms of IV rank, you want to make sure that you're looking at stuff with a rank of 50 or more. Sometimes 30 or more can be okay, but generally speaking, 50 or more is where you need to be. And you also want to keep in mind what is already in your portfolio. So you want to keep everything nice and diverse. You, if you're very heavy in any one sector, you don't want to look for more positions in that sector. There are some more advanced stuff that you can do to ensure diversification, but for the most part, just use common sense and you'll be fine. So at the top here, anything with a forward slash, by the way, is a futures underlying, which we're not going to go over in this video. And so then everything else is just an equity. So we've got TLT with an IV rank of 99.3. We've got GLD here. We've already got position on GLD. We've got EEM, EWW, GDX. In fact, let's have a look at GDX today. GDX is usually something. We can usually find nice trades on GDX, is what I'm trying to say. It's currently trading at just over $40. It's got an IV rank of 68, and it's got an absolute IV level of 36.9. So I've got high hopes for GDX. So let's go into there, and we want to pull up the December 20th expiration. And now we are presented with the options chain. So at this point, all we want to do is simply sell one call and sell one put. Where are we going to sell them? We're going to sell it at anything with a 15 to 20 delta. So on the call side, we've got an 18 delta here at the 46 strike, and on the put side, we've got a 17 delta here at the 36 strike. So we've got a range of 36 and 46. Now, we would collect $96 upfront on this position. Our broker would require $400 to open this position in buying power. So we're getting a pretty nice return on capital here for a naked position for sure. We've got a 72% probability of profit, and if we wanted to close this position at 50% of max profit and not hold all the way to expiration, then we've got an 88% chance of being able to get out at that profit level. So we're looking at some very, very high probabilities. We can, of course, buy a contract a little bit further out to reduce our buying power requirement. We would be reducing our premium that we collect. However, because this is a small underlying and not much buying power is required to open a naked position, we are getting a nice return on capital. I think it's perfectly fine to just leave this as a naked position, even for small accounts. Of course, depending on how small the account is, but as a general rule of thumb, this is an opportunity where we can enjoy higher probabilities of profit. So in terms of knowing how much buying power to allocate to your positions, we've put together a spreadsheet here. It's free for everyone to use and get a copy of. And the way it works is you enter in the size of your portfolio here. You then enter in what the current VIX level is, and everything below that will then be automatically calculated for you. And at this point, you simply just need to use this information to form the backbone of your portfolio, and you'll be just fine long term. Again, link is in the description for that. Click on free position sizing template and it'll take you to where you need to go. If you would like to learn in more detail and see what we're doing behind the scenes in our portfolios, then by all means you can just come to EDS Premium here. Link is in the description. And get yourself signed up, and inside you will have access to our portfolios where you will be able to see what positions we're placing, how we're managing risk, any adjustments that we're making, etc., etc. There's also a full course inside, so no prior knowledge is required. We will teach you everything you need to know, and of course it is a private community, so if you get stuck, you can speak directly with myself or with other like-minded individuals, and there is a 100% money back guarantee. So once you have studied everything, the full course, and followed our trades for at least 6 months, if at that point you haven't seen results or you still don't know what you're doing, then we will work with you for free until you do, or you can simply request a full refund. So it is completely risk-free on your part. It's £1 a month to join right now. Once you're in, you're in. You don't need to worry about any price increases. The price will be increasing, by the way. It's only this price for the first handful of people, and also for the first handful of people that join, we are offering complimentary one-on-one onboarding calls with myself directly, so you are rewarded for getting in early. And with that being said, I will see you guys on the inside.